Good afternoon, ladies and gentlemen. My name is Ryan Rebischke. I'm an insurance manager here at Paris CPAs. Today we're going to talk about the riveting topic of financial reporting for non-financial professionals. Feel free to, as you have questions, to just type them in the chat, and as I see them pop up, I'll address them, and then there'll be some time at the end of the presentation as well for questions. The goal of this presentation is to give you a basic level of knowledge about governmental reporting and to empower you to understand your own entity's government reports and kind of know what they mean. I'll admit, this is a bold undertaking. Accounting is pretty complex, and government accounting is even more so. But to accomplish this, I'm going to use a lot of layman terms, and we'll try to keep this as exciting and entertaining as I can. That being said, let's get started. So we're going to talk about several different things. Why do we have financial reporting and what really is financial reporting? We're going to go through government statements, explain those, and kind of get a handle on what those look like, what they mean, what different components are. We're going to talk about the budget to actual process, what it is, why it's important, and what we can glean from it. And then we'll briefly talk about the audit process just to kind of put a nice neat little bow on financial reporting. I did not start my timer. So financial reporting is a way to show the sources and uses of resources by an entity. So if accounting is the language of business, financial reporting is the report card. It says, how do we do? Where do we stand? What does our future look like? Kind of what does our past look like? It kind of gives a understanding of how the entity is doing with monetary values. It allows management to track trends and better understand what works and where problem points are. In the non-governmental world, this is, profit to loss. Are you making money for your shareholders? Are you growing? Are you sustainable? In the government world, this is much more of, are you properly using community resources in a way that best serves the community? And how did you do with those resources during a period of time, usually a year? Financial statements specifically provide a snapshot of an entity's financial health at a specific point in time. So what that means is when you look at a set of financial statements, and we'll go through one during this presentation, you'll be able to see how that entity is doing as of that date. So usually it's in the government world, either June 30 or September 30 year end. So as of that date, what did their financial health look like? To understand the statements, we'll talk a little bit about governmental accounting and understand some kind of basic accounting concepts. So accrual accounting is if you have any accounting friends or have watched any show that featured accounting, you've heard that term. And what accrual accounting is it's a way of booking transactions, so money coming in and money going out, that matches the effort with the reward. So if I spent money to do something in 2020 and that reward becomes available in 2020 or near the end of 2020, I want to make sure those two things are matched up. So accrual accounting is where we get terms like accounts payable and accounts receivable. So accounts receivable being money that we've earned that hasn't been paid to us yet, and accounts payable being money that we've spent that hasn't, are things that we've received that we haven't spent the money on yet. And accrual accounting matches those two things up. So in government accounting, to make it more complex, there is two focuses of resource management. First, you have the economic resource measurement focus. So This is kind of the company or the entity as a whole. So the all parts of the government, what does their financial health look like? Do they have a lot of assets, things that they own that they can use as resources? Do they have a lot of liabilities, things that they have to pay out? Are those liabilities short term, they're due in a year, or long term, they're due in more than a year? Are our assets very liquid? Are they all cash? We can spend them immediately, or are they tied up in, say, investments like the LGIP or CDs, something like that? Or are they in fixed assets, which would be physical things that the entity has purchased, trucks, cars, buildings, desks, things like that? The economic resources measurement focus looks at that in total. And that uses full accrual accounting. The modified accrual accounting comes in with the current financial resources measurement focus. Kind of a mouthful. What that's looking at is how are we doing for a 1 year period? Do our resources coming in during that period cover our expenses going out during that period? So this doesn't use full accrual because when we have this focus, it's not about what long-term things do we have. It's about what can I do right now? If I have a bill come up today, can I pay it? If, say, a pandemic were to come up out of nowhere, and now all of a sudden I can't get money into the same degree, am I sunk, or do I have enough current assets to cover that? That's really what the current financial resources measurement focus is. To even further complicate it, government accounting also has something called fund accounting. So fund accounting is where you separate activities into silos, kind of like on a farm. I was raised on a farm, so several of my analogies will be farm-based. That should fly in Idaho. You have different silos with different products. You might have wheat in one silo. You might have corn in another silo. You keep those activities and products in that silo to keep them separate and to track the activities of that silo. So the technical definition is a fund is a self-contained and segregated set of accounts. So each fund has its own mini books that track its transactions and activities that separately report resources and activities of a segment of a government entity. So to visualize that, if you think of a government entity, say a city or a county, they have different functions that they track separately. So an easy one for a city would be a Parks Department, Parks and Rec. Anything that is involved with the Parks and Rec Department is in that specific fund. The activity is tracked there, their assets are tracked there, their liabilities, what they owe, are tracked there. And this allows management to see how is this fund doing in and of itself. You might have, a government entity will have 3 or 4 funds, and 2 of them are doing just fine. The money coming in covers the money going out. But that third one is struggling more. There's either not as much coming in, or it's a large drain on community resources. Well, by having them tracked in funds, it allows government entities to better see where they need to reallocate things, where the problems are, where things aren't connecting. There are several different kinds of funds. We'll just briefly touch on them because this is kind of in the weeds of accounting. There's government funds. These would be things that when you think of like utilities and a government, that's what a government fund would be. So like a government fund would have like the police force. That would be in a government fund. It's not something that you can directly see a payment for. Like I don't go and pay my local police department to keep me safe. They're just funded off my taxes. Or like streets and roadworks. That's another one where I don't directly pay for that. It's funded off my taxes. So that would be a government fund. You'll also see capital projects when like ACHD does construction on the freeway, which is of course never ending because the freeway is always under construction. That would be in a capital projects fund. And if there's any associated debt, that would be in a debt fund. Another type of fund is a proprietary fund. This would be something that pays for itself. So an easy example is a golf course. A government-owned, like a municipality golf course, is a fund where fees come in, you pay the green fees, you pay the club fees, and that revenue funds the expenses going out. So the cost of the grass maintenance, building expansions, stuff like that. That would be a proprietary fund. Proprietary funds operate more like a normal business. Like if you went and looked at Amazon's statements, they would look similar to the way a proprietary fund operates. And then the third and final fund is a fiduciary. This would be if you are holding money for someone else. So the easiest example of this would be Percy. So Percy, the entity, serves as a fiduciary fund holding your retirement contributions. The entity, like your government entity, so your county, your city, what have you, school, they don't hold those Percy funds. They pay them to Percy. Percy is then one giant fiduciary fund that holds all these monies for you until you eventually retire and pull those sweet, sweet retirement payments. Within the broad world of government financial reporting, there's something called a annual comprehensive financial report, or a CAFR. This is something that's not required, but it's optional. You might have seen one. Generally larger government entities will produce them. It takes the financial, it's kind of a comprehensive financial report. It includes the financial statements that serve as that snapshot of your entity. How do things look? How do things shake out for the year? It includes the auditor report. We'll touch back on that later in the presentation. And then it'll also have several extra items that just better explain and talk about how the year went for that government entity. So they'll include things like introductory letter. Generally, someone at the top of management will write this, and it'll talk about how the year was, usually the struggles we faced, the challenges we overcame, stuff like that. It'll list out the officials and the organization chart for the entity, so all the big major node points. You'll then have the auditor report statements, and it'll also include some narrative reports. This could be something, perhaps a certain project was delayed or took longer than intended. They might talk about that. Or as we're seeing now, more social, ESG, environmental social items might be talked about in a comprehensive financial report. And then usually some statistical schedules that are pretty much just for the accounting nerds to read. They're usually pretty dense. And even those of us that are trained in accounting kind of will scratch our heads sometimes at what exactly we're looking at. Within the financial statements, you'll have they're called the basic financial statements. It's the standard reports that you'll see in any complete set of financial statements. These serve to give the users an understanding of the entity's health. There'll be something that talks about the balance sheet, so what assets and liabilities they have, and there'll be something that talks about the profit and loss activity. You'll see that there's two subheaders here, the government-wide and the fund basis. The government-wide follows that full accrual. It shows you the full health of the government entity. What are our long-term assets? What are our long-term liabilities? What does our total picture look like? You'll have the statement of net position. That'll talk about your assets and liabilities. And then you'll have the statement of activities. That's what did you spend money on during the year. You'll then also have the fund basis statements. These deal with the funds in their specific silos. and they will only cover that modified accrual, that current focus basis, current financial resources basis. So they're only looking at what did we have this year? What current assets do we have? What current liabilities do we have? And what revenues and expenses were directly spent during the year? They'll have a balance sheet, same thing as the statement of net position, a statement of revenues, expenditures, and changes in fund balance. Again, real big mouthful, same thing as the statement of activities. Talks about what money came in, what money went out, and was there any other changes to our fund balance? We'll talk about that shortly too. And then the statement of cash flows will appear for proprietary funds. That statement, just like it sounds, talks about your flow of cash during the year. As we know, cash is king. Doesn't matter how high your revenue is. If you can't get paid, then you can't pay for things, and that's a problem. So I guess let me rewind a little bit. When you look at a set of financial statements, it's composed of 3 parts, generally. You have the statements, that gives your snapshot. And then you have what's called the notes to the financial statements. These are just like they sound, because accountants have no creative bones in our body. Notes explaining the financial statements. These are items that need a little extra explanation for the users of the statements to properly understand. So for example, you might see on a statement of net position, the net amount of fixed assets that the entity owns. So that's the amount of equipment, buildings, fixed property that they owe, less any expense we've already taken against that to a net number. So that one number tells you how much fixed assets a government entity owns, but you don't know what the makeup or the detail of those fixed assets are. So you might have, such as this example here, which in this case is note C, a breakdown of what that fixed asset makeup is. So how much is land? Well, in this case, it's $9.5 million. It's a big chunk of land. That's good. Land is skyrocketed right now, so it's good to know that this entity is properly, they own the ground that their property is on. Land improvements, buildings, vehicles, these are all things that kind of gives you a breakdown of where, what kind of assets does this entity have? What do they spend their money on? How much of that is still rolling? How much of that maybe is starting to get a little older and will be replaced? You can glean that information from this footnote. There's all kinds of different notes to the statements. This is a very common one. There's usually a pretty long one right at the beginning that explains all the different accounting treatments. That one's just, accounting jargon, basically, boilerplate, legal stuff. We treated accounts receivable this way. The basis of accounting is this. All stuff that doesn't really matter to non-accountants. There'll be other detailed schedules, other breakdowns of other summarized numbers. Then usually there's a note that talks about if there were any subsequent events. This would be things that happened after the year end, but before this report came out. So for example, if you go and look at all of the 2019 government audit reports that didn't get finished prior to March 2020, every single one of them has a subsequent event for the COVID-19 pandemic. So it was a pretty big deal that, especially right then, put everything into uncertainty on, how is this going to shake out? How's this going to affect us? We don't know. So they will show up in almost every government statement that happened around that time. A third component that in the government world you will almost always have something called required supplemental information. These are items and reports that the people who set accounting standards, GASB, have decided are pivotal to users understanding the financial statements. So these are things that, while they're not a part of the actual statements, if you don't have them as well, you won't be able to see the complete picture when looking at those statements, that financial report for that period of time. The big three that are very common would be management's discussion and analysis. This is usually a few pages to about 20 pages, depending on the size of the entity, where management just further explains how the year shook out. Why, let's say current assets, so cash investments, maybe they're up 20%. Why? Did they not spend as much money? Did they have an unexpected windfall? It'll be their discussion, their understanding of what happened during the year and what should you, the user, understand about the year. This section can be very helpful for someone who isn't totally up on accounting, but you want to, you go to your city, your county, your school district, and you look at their statements and you I see there's this big change in this one area. Why? There's a good chance you can find out in the MD&A, management's discussion analysis. The next one is the budget comparison schedules or statements. This is your budget to actual. In the government world, the budget to actual is, it's king. It's the way a government entity can tell, did we stick to our plan? Did the year shake out the way it was supposed to? And if not, why? And how do we need to either reallocate funds or readjust going forward so that we can make sure we're properly using community resources? And then finally, the funding schedules for the defined benefit plans, PERSI. This is a schedule that is purely for accountants and actuaries. It is not, it's informative, but if you're not an accounting person, it doesn't mean anything to you. Idaho PERSI is fantastic. It's very well funded. So it's a required schedule that we put in all of our audits and all the statements, but it doesn't really mean anything to non-financial professionals. So now let's take a look at the statements. So the first statement we're going to look at is the statement of net position. So there's a couple of key areas here. If you look at the right of the statement, you'll see there's several areas. You've got assets here at the top, deferred outflows, liabilities, deferred inflows, and your net position. So assets are resources that we own. These are things that we have under our control that we can use to accomplish activities during the year. So cash. And these examples all came from the Ada County 2021 CAFR report. So if there's anyone from Ada County here and this looks familiar, that is why. So for example, they had at year end 21 million of cash, which sounds crazy, but Ada County is pretty big. So that's about right. That means that if everything stopped flowing in, they would still have that 21 million to cover expenses over the next amount of time. Deferred outflows are effectively obligations we will owe. So these are things that as of right now, we don't have to pay them, but we know we will at one point. Usually this is a pension obligation. So you have, all your employees are paying into their pension, and then there's that employer portion that the government entity covers. That is what you would see in those deferred outflows. So it's an amount that we don't know now, but we will owe. And so it kind of sits there between assets and liabilities. Liabilities are obligations that we owe. These are things that we owe to other people, other entities, other government groups that we know are now. Because this is government-wide, it includes both current, like accounts payable, and long-term, so any debt or bonds that we have that are due farther out than a year would show up on this statement. Deferred inflows are kind of the inverse of deferred outflows. They're resources that we will own. These are things, it's an amount of money that's coming our way that we don't have a right to yet, but we will in the future, and we know what the amount is. So the big one here is the deferred property taxes. Your property taxes get assessed in the fall, and then government entities all get their chopped up apportioned amount. You know that amount is coming to you, but you haven't received all of it yet. So that portion sits in deferred inflows. And then finally, the net position is the net remainder of our resources less our obligations. So this is how secure are we sitting. The easiest way to think about this is if you own a house, you likely have a mortgage on that house. The difference between what your house is worth and what you owe the bank, that is your equity or your net position. This number is useful to see how leveraged, how much debt does a government entity have. If their debt is very high and their net position is not, that can be a problem. It can be fine. It kind of depends on why, and the circumstances of the world. But that gives you an idea of where that entity is really sitting. Next, we have the statement of activities. Now, this is a report that is a bit dense. The way it is structured is very accounting. Generally, even beginning accounting professionals struggle with interpreting the way this report is set up. Effectively, it's composed of two things. So revenue, which is money coming in, and then expenses, which is money going out. As far as revenue is concerned, in the government world, you generally have two revenue streams. Charges for services. This would be anything that is a fee or an exchange transaction. I paid my government X, I get Y. Water, sewer, the golf services, those sweet green fees, anything like that would show up in charges for services. Then there's something called a non-exchange revenue. This would be like property taxes. So this is something where I pay property taxes to the state, and then I get a benefit out of it in the various services that I consume. But you can't really trace my, $2,000 or whatever dollars in property taxes to the police taking care of me, the roads that are maintained. So they get allocated across fund by an amount that's accounting ease. But effectively, your non-exchange revenues will show up down here at the bottom. Your services, your charges for services, or any grants or donations would show up here. And then this line would be your, I'm hoping you guys can see my mouse. This line would be your expenses, and this sums across. As a non-financial professional, this is a dense statement. I don't expect you to go look up the city of Boise's, look at this and be like, oh, look at that. They spent, X amount on this. I don't know what that means. The important thing to get out of this is what is this? What is this net total? And what is this bottom line? As long as we're seeing a positive change in net position, so they finished ahead for the year, that's good. We want to see that. We want our government entities to have a balanced budget. We'd like that surplus. I know the state of Idaho just sent out their surplus checks. That's awesome. Loving that. We generally want to see that. If we don't see that, then the question becomes, well, why? Did perhaps one fund just have, they got hit by COVID-19 harder, and so they just had a rough year, and that hit affected the government hard? Well, that makes sense. If streets, the street fund is way underwater, well, why? Is that, our funds not being allocated correctly, our resources not being spent correctly? Why? And this number kind of gives you an idea of that. The net position, again, being our net amount. This just reconciles from the beginning of the year to the end of the year with the current year's activity. The balance sheet is the same as net position, but for the funds. So the concepts are all going to look pretty much the same: assets, deferred outflows, liabilities, deferred inflows. Generally, you'll see less deferred inflows and you will rarely see deferred outflows due to the fact that if they're due more than a year out, we don't see them on the statement because we don't care about them for the purposes of the statement. Usually deferred inflows, you will see an amount because a portion of your taxes will be due, like it will come in the next few months, and so that does get recorded here. And then you'll see fund balance instead of net position. It means the same thing. It is your net remainder of your assets less your liabilities. It's just at a fund level as opposed to the government-wide net position. So here at the top, we'll see some different funds. So there's the general fund. That's just what it sounds like. Your general activities, police, admin, usually so for cities like the mayor and the council, for counties, their management would be a portion of the general fund. Any kind of general activity that isn't significant enough to be its own fund will show up in the general fund. Some of the other major fund that ADA has would be the Charities and Welfare Fund. And then anything that's small and isn't big enough to warrant its own column shown on the statements, they all get lumped together in our other governmental funds for our total amount here. And then this goes down the line to our fund balance, and then our total fund balance, liabilities, and deferred inflows. So what that means, just so you can wow your accounting friends, is there's an equation when you look at the statements. So assets on the left have to equal your deferred inflows, liabilities, and your fund balance. So if you ever see statements where this number doesn't equal this number, those are poorly prepared statements. They are wrong. You will probably never see that. That would be pretty crazy for a government to produce statements that didn't agree. But if you do, now you'll know. So this is the statement of revenues, expenditures, and changes in fund balance. It's just the same as the activity statement, but on that fund level. Revenues, money in, expenditures, money out, that's the same. What you will see here that's different is there's this concept called other financing sources. Anytime money came in that wasn't related to either revenues or expenditures, this is where it goes. This is usually you'll see transfers between funds because we still have to account for those items. They're just not relevant to the fund statements. So transfers is the biggest one you'll see here. This would be, say, the general fund is covering for another fund, they're transferring money out, or another fund is paying back the general fund, they're transferring money in. That is the big thing you'll see here. So, and we'll finish up the basic statements with the statement of cash flows. These only apply to proprietary statements, so statements that fund themselves, because this is really a accrual, like a normal business function. Again, these are kind of dense. Government cash flow statements are pretty dense. Some things to point out to know is that you'll see 3 different categories. So you'll see operating income, and that's all they have on this one. That would be cash flows related to normal daily activities. That's just your normal, my receivables came in, my operating income, my payables changed, anything with your normal day-to-day, that's an operating cash flow. And you'll see these changes here by fund. So this is saying that the operating income for this major fund, they had a loss, 7.5 million. EMS, not a surprise, a lot more money going out than coming in. on that. And if you look, their pension expense changed by this amount. This is about 1 million. Not super relevant to non-professional or non-financial professionals, but that's what this statement explains. And then if they had any investing activities to be cash related to future projects, this is kind of an oversimplification. It's really cash being invested in something that is an investment. It would be documented here, and then if there's any financing, the big one you'd see here would be bonds. If they're issuing bonds or taking on any government debt, that's a financing activity because you're bringing in resources using debt financing to cover that cost. And now we'll talk about the budget to actual. So the budget to actual is, especially for the non-financial professional, probably the most important statement that you can look at outside of the net position and balance sheet, because it will show you in detail what did the entity think they would spend and what did they actually spend. So this is a required component of the statements. You will see this in every government statement that isn't incorrect, impaired, qualified. And you can get a lot out of the statement. The budget is what we expect. What do we think the year was going to look like? How much did we think we would receive for property taxes? How much did we think we would spend for treasurer services? Now you'll notice there's an original and a final column. This is because sometimes during the year, things go sideways or things are better than you think, and you have to amend your budget. Now there are specific parameters as to when you would amend, and there's a little bit of leeway within the government entities as to what that percentage, how different are things looking to be to when you would need to amend. But if you look, you both those statements, and you look at the budget to actuals, you see, the original and the final the same. They didn't amend. They just had the one budget. Nothing changed enough. They needed to change it. Cool. Sometimes you'll see an original and the final, and they're different. This is because they had to amend. Again, if you go back to the 2020 statements, you'll see a lot of amended budgets because we went into 2020 thinking one thing and then soon found out another that just destroyed everyone's budget projections. You'll also see the actual column. This is what happened. So we thought we'd receive this amount of property taxes. We actually received this amount. Hey, awesome. We got more than we thought. That's a positive variance. Are there any negative variances here? There are not. So a negative variance would be, we thought we were going to spend this much, but we actually spent more. Bummer. Generally, when you open this up, you see a bunch of positives. Oh, there's one. There's a negative right there. Generally, you open this up and you look at your budget actuals. It'll give you a great idea as to how good the estimators were at anticipating what their costs were going to be, and then how good they were at actually sticking to those costs. We thought we were going to spend, $1 million on salaries. We spent $1.5 million. Oops, that's a problem. Maybe we're not allocating resources properly, using those community resources properly to make sure that we're in line with what we should be. Like a for-profit business, so like Amazon, like a normal company, you can look at their bottom line and see, oh, hey, they made, their net profit was $1 million. That's also doing really good. You can't really do that with the government. What you can do is look at their budget actuals and see, hey, they thought they were going to spend this much. Did they stay within those parameters? Did they have enough resources come in during the year to cover the expenses going out that they thought they were going to have? Super useful statement. You can get a ton of information from the budget to actual. So I kind of talked about this, about what a budget is. It shows a clear picture of how the entity is planning on getting their money in the fiscal year and how that money is going to be spent. Even a good budget might need to be adjusted depending on how things are going, if there's a pandemic, or even if it's not just if there's a giant pandemic that could cause a budget to need to be amended. It could be something like rampant inflation, that your construction project that you thought was going to be $3 million turns out, oh, actually now with the cost of labor and materials, it's going to be 4.5. We have to change our budget to see if we can make this work, because governments only have so much money coming in during a year. So if they can't cover that and they start incurring too many losses, that's not going to work. Governments don't have the latitude. Government entities don't have the latitude that, say, for-profits do, where they can just run a deficit forever and the bill never comes due. Although sometimes it could be like that, especially in other states. Why should we care for the budget to actual? Within governmental accounting, it's a required component. You have to have a budget published for the community to see, for every government entity, every school district, every county, every city, every special district, recreation districts, highway, water. All those have to have a published budget so the community can see what are you planning on spending your money on. And then there's usually a time for them to come in and comment. Hey, this looks great. Hey, this doesn't. And they can kind of give that feedback to the government management. It shows what the entity is planning on spending their resources. It can help focus departments and fund goals, especially in the general fund. The general fund has a lot of moving parts. Police, admin, all those gears, and there's only so much money that can be allocated. So where do we want to spend that money? What's most important? Maybe the police need a new cruiser. Maybe the admin building hasn't been renovated in 100 years, and the AC is horribly expensive because the thing leaks cool air all summer long. And if we fix that, it'll lead to a bunch of cost savings down the road. Maybe. And it shows, to the users of the statements, it shows accountability, transparency, and good faith reporting. When you have a good budget and it's published and members of the community can come and see it and comment, they feel like government officials are doing their job, they're spending their money appropriately, and they're not trying to, hide the buck and just pay it out to themselves a bunch. They can see, where are my tax dollars going? Where is money being spent in this community? The budget process. Some of you are probably involved with this. If there's some clerks in the audience, so you kind of know. You set your goals and you create a schedule. You want to understand the financials. This is why some of you are here, and their impact. And then you want to kind of set basic parameters to know, where do I need to allocate money? Generally, you'll see, for good budgeting, you want to pick certain key hard points that matter the most. And you want to budget for those first, because hey, we have to cover these expenses. Like salaries, you have to cover your salary expenses for your employees. We all want to get paid for the jobs we do. So we want to make sure that our budget covers that salary. Maybe there's a small side project that you'd like to work on. If the money's there, you probably budget that last. And then whatever's left over would get put there. But all the hard things that really matter, salaries, benefits, items like that, those get budgeted first. And they usually get based off of key metrics that are important during the year, and what did last year look like. So, for example, we had 10 employees. It cost us $1 million to pay for them all. This year, we gave everyone 3% raise. So, and we still have 10 employees. So, in theory, it should be what's that? $1,300,000, $1,030,000. Accountants actually can't do math. We use calculators all the time. It's a little trade secret for you. During the year, easy. I should know that at the end of the year, like my budget to actual should be pretty close. Maybe a little variance. Maybe someone got laid off, or we hired someone else into the year that might cause a variance. Otherwise, I should see next to no variance there. The budget needs to be approved. This is, again, a government requirement. You have to have your budgets approved in a session, usually with or after there's been a period for feedback. And then you have to actually implement the budget and stick to it. Just because you set your budget at the end of the year, if you don't follow it and keep track of it, it's worthless. And then you get to the end of the year and you're like, oh my gosh, we totally overspent in these 4 categories. We had no idea because we didn't implement our budget and track it during the year. Some important things to note for people who set the budget, and for those of you who get questions or get harassed from the people who set the budget. This is why. They're trying to mind the gaps to make sure that their budget is as accurate as possible. So if you have, say, you're in charge of a purchasing department for, let's say, the recreation fund, and right at year end, you spend a bunch of money, but you don't get the bills yet, and then you don't give them to the accounting department until a month later when those things come in. They're not going to be happy because now they didn't realize that money was spent, and it'll have affected their budget calculations for the year. This is why you might get like some pushback from the accounting department on timely submitting of your invoices and receipts. You want to have a little bit of wiggle room in your budget. And what that means is if you think something is going to cost $1 million to the penny, but there could be some cost overages, put that in the budget. Have, a 2-3% wiggle room that then kind of allows, hey, we've planned for some contingencies. We think it's going to cost this, but in case it costs a little more, we're prepared for that. Then, if it doesn't, now you've had a surplus and you can use those funds for something else at the end of the period. You want to try to account for inflation. Right now, good luck. It's kind of all over the place. That's certainly been easier to do 4 years from now than it is now. So definitely you want to just try and go a little over as opposed to a little under with today's current economy. And this is, like I said before, calculate what you know first. Start there, fill it out, what you know is correct first, and then you can fill out the other more vague or less easily determinable costs. So finally, we'll talk about an audit. An audit is a third-party verification of the statements. There's a couple of reasons why you would need one. Generally speaking, state and federal regulations require that government entities receive an audit. There could be a case where you don't. Those are very niche and very rare. I have not personally seen one, but they do exist. And the other reason why would be if you need a single audit. A single audit is a additional assurance service that is required if you spend more than $750,000 of federal government funds. So a big one for this, there was a bunch of coronavirus money that was paid out over the last 2 years. A lot of government entities received enough and spent enough that they had to get a single audit on top of their normal audit. It's basically an extension of the audit. We test a few more things, and then we report on those federal dollars spent. So an audit is like I said, a third-party independent verification of the entity's financial statements. They are complete and materially correct. What that means is you might have heard materiality correct from your accounting friends and no one else. If I'm looking at a set of financial statements and they have $10 million of assets, so they've got $10 million bucks, and I find something that's wrong by $100, I'm not really concerned about that. I mean, when you look at the grand scale of of the 10 million, $100 is pretty insignificant. I mean, that's a petty cash drawer that got misadded. I'm not worried about that. If instead I find, well, there's $1 million problem, well, that's an issue because that's 1/10 of your total assets. Something is wrong there, and these statements now are not a accurate snapshot of that entity at that year. An auditor, which is myself, will issue an audit report that indicates the next statements are clear and correct. That would be an unmodified opinion because accountants always have to make things confusing. It used to be unqualified, which was even more confusing. Or if something is wrong, we'll issue a modified report. So these statements have been modified because something was wrong or we didn't have access to a certain kind of data. Again, pretty rare in the government sector, because normally there's enough safeguards already in place that if something is that wrong with financial statements, it gets caught sooner, but it can happen. If you have some smaller entities, some smaller counties or some smaller cities that don't quite have, maybe they'll have some accounting staff transition during the year, and someone will leave, and then in order to get someone to replace them, it takes a little longer than thought, maybe something slips through the cracks. But it's pretty rare to see a modified, a non-clean report in the government sector. So the audit process, it's a 3-step process. First, we plan the audit. This is where the auditor will meet with the entity and get an understanding of their specific activities. You know, where does money come in, where does money go out? What does your your internal control culture look like? So who reviews who signs off on what? We'll then go out and perform field work. This is where we actually test things. You know, your accounting details say that you have 10 invoices or $1,000 each on this account. Let me see those invoices and make sure that they actually agree and they're correct. We'll also look at revenue, deposits coming in, do some really fun calculations on property taxes, things like that. Just make sure that these statements are correct and that we agree that they are complete and clear. And then finally, the reporting staff, where we will assist. Either we will assist or management will create the actual financial statements. We ensure that that agrees to the data. There's letters that go out that just assure everything is on the up and up. And that's the process. So thank you, everyone, for joining me on this presentation. I hope you were able to get something out of it and at least have a somewhat decent understanding, or at least you can look at statements and kind of know what's going on. If you have any feedback, maybe I glossed over something too quickly or something wasn't quite clear as to what I meant, please send that to my email. I'd love to have any feedback. And then if there's any questions, we have a little bit of time left. I will happily entertain them. You can chat them in the chat box.